All right, good morning, everyone. For the record, it is um, April 29th, 2021, and this is our weekly BDA AMO meeting. This is the really the first one that we've restarted for a little while. We have a small crowd here today, but I know there's some people that can't make it. So for those that can't make it, this is a recording, so we'll make sure that everyone gets this as well. And we put it in the band and we put it in the Google Drive so that you can view it afterwards. But our whole focus today is originally we were going to have Global Atlantic Elk, but unfortunately the rep had an emergency. And he already knows this, but we're not allowed to tell him it anymore. But we have Mutual Omaha coming out. He's our second fiddle for today. But our whole focus of what we're going to talk about at the beginning is we're going to have a conversation about Mutual Omaha, prepare some questions, prepare some things, and then Brad Coffin is our rep, as our external rep over at Mutual Omaha, and then he's going to come in and talk about kind of answering that question that we've always talked about with carriers of why should agents have them as part of their product portfolio. So he's going to go over that, but what I want to talk about is just have that discussion of what we know about Mutual Omaha on our side, and come up with maybe some questions or things that we can ask Brad, or how we can utilize Brad then as well in the future. So that's really what this first part of the conversation is. And then Brad's going to come on at 10 o'clock Central Standard Time and have that conversation about really what their value proposition is. We can ask questions and things like that, and that'll be more conversational tone. He does have a little bit of a presentation to walk through, but again, this is a time for everyone to be able to ask direct questions about what's happening with Mutual Omaha, what's going on with them, any product changes, any unique value propositions. Excuse me, hold on one second. And kind of get the inside scoop so that you can pick up, 1 to 3 things, maybe at least of, oh, this is unique about Mutual Omaha. This is something that I need to be able to express when I'm talking to agents about why they should have them as part of their portfolio. So to keep it as an open-ended question right now, let's just start. Like I said, I know it may just be you and me, Jeff. There might be a couple people that come on, but as of right now, because I know you have lots of experience, Jeff, what is Mutual Omaha right now? When I say that, what do you know about them? What's your experience with them? Like, I'm going to keep it open-ended, but just talk to me about what you know and have experienced with Mutual Omaha right now.
They have a wide variety of markets that can be satisfied. They do life insurance, they do disability income, they do critical illness, they do Medicare subs, and they have two choices of a standalone LTC plan.
Absolutely. I mean, that's one thing that hammered down is the so to talk about the packed message of that, in a nutshell, basically, is that they probably have one of the most robust product portfolios as a carrier. I don't know anybody off the top of my head that has that many product lines across the board, which is extremely helpful. Like, you have Mutual Omaha, you have a good piece of the the vertical marketplace within those fields, because you can go into each one, whether they're completely competitive in one space or the other. That's a different story. But across the board, they're in the top players, basically. So I think that's very important, because if people aren't using Mutual Omaha, then it's like, well, where are you putting those products, basically?
Mm-hmm. Now, Nathan,
those other places.
Yeah, I have my volume at 50, and you're coming in Is there a volume switch that you can turn yours up or the mic position?
There is, but I think it's all the way up. Let me check though.
Hmm.
All right, it's now it's all the way up. Is that better?
Yeah, that's good.
Okay, perfect.
Yeah, that's much better.
Yeah, absolutely right. So robust product portfolio. Anything else? Just either previous experience or if you've used them before in the past or how you've used them. What does that look like?
I've primarily used them for the Medicare subs.
That makes sense.
Yeah, I have found their Medicare subs are a standardized marketplace, for lack of a better word. But the ones they offer are, right in the sweet spot. So
No.
that most people will go to, and with F being eliminated, G is pretty much now the go-to supplement. So
that is what I know as well. That's about as far as I know. Yes, and I know for our purposes with Brad, just so that we don't throw him for a loop. I know he's mainly on the life side.
okay.
For what Brad's role is. So the Medicare supplement side, there's a different division. So one thing, and I know he'll briefly talk about it, but Mutual of Omaha has 3 different divisions. They have in essence, their standard life division, which is their term, their IUL, their GUL, things like that. They have their simplified issue product line, which is most of those products, but that requires their non-meds. And then they have their Medicare product line as well. And then and maybe I'll ask them, but I can't remember where, I think the long-term care and the other stuff falls in the first standard life category, and disability and things like that. So technically those are 3 different contracts. You'd have to get contracted with each one. So that's important to mention on our side, because if someone says, well, I want to get contracted with Mutual of Omaha, it's important for us to ask the deeper question of, okay, well, which side of Mutual of Omaha are you really focusing on? Or do you think that you need access to this? Or talking to them about, this is the product lines that are within this contract, and then this contract, and then this contract. Because we've definitely had it in the past where someone wanted the simplified issue side, and then they submitted a contract, and because we didn't ask the question, that goes over to the life side, and then they try to find the case in their back office, and they can't write it. So
falls in the Bermuda Triangle.
Yeah. Yes, and there's a few other AIGs like that as well. They have 3 separate divisions. There's not many carriers that have that many divisions. But that's important to mention on our side. As we're getting ready to bring Brad on, and what that looks like, if you're talking to an external rep from a marketer side, and like I said, I know it's just you and me, Jeff, right now, but from your end, what questions or things would you want to ask Brad about or know more about, just in the grand scope of what you know about Mutual of Omaha?
I would venture to say that knowing being familiar with their portfolio, the income advantage, and I'm drawing a blank on the other UL plan, more get into where their underwriting fits, what their criteria is, what they look for, where they're strong, where he feels that they're strong.
I agree. I know one on my end, like I said, if he doesn't, he's going to deal with some of this, of course, but there's some things that, that's why I want to be prepared and have those questions ready, so that we have that information that we know that we need. So one thing on my end is about their resources for agents that you don't need a login for. So are there any microsites? Are there any places they can run direct quotes from, or things like that? Like I know we have WinFlex and Vital Quote and things like that, but sometimes like AIG Partners Group as the example.
The Rapid Rater.
Exactly, Rapid Rater, or are there other materials or tools that they have? Have they created client sites that agents can leverage? Because there's a lot of good materials that then go into that's a good thing that we can, I want to know about, because we can get that information to someone beforehand without them having that writing number, so that they can get a little hint of like, oh, we have access to this, and you may have not known that Mutual of Omaha has this. So I think that's important to mention on that side. Any other questions that you can think of as well?
Not at the moment. I'm sure they'll come up though as he makes his presentation.
Absolutely. And then outside of that, then let's also think then, how can we, what is an internal or an external marketer? How can we leverage them as marketers ourselves, as business development advisors? So answering that question of, so we have a Brad Coffin. How can we use him? Where does he fit within our consultation with agents? Is that someone that, people can have direct access to? Can we leverage them for webinars or get product information? I know Brad also has an internal as well. So he runs quotes and deals with some back end stuff. But I think that's important to mention for us to understand too, is answering that question before we're done is, well, Brad, this is all great information. You're over there. How can we utilize you better with the agents? Because like I said, Mutual of Omaha does a lot of business. And still a piece of that model is people like Brad that are the external wholesalers that are still working with agents, agencies, IMOs to distribute information outside of course, the emails and the letters and news stuff that Mutual of Omaha sends out from the corporate standpoint. So that's a unique part of what we want to get used to as well within our relationships with the vendors and the carriers, is how can we utilize that better? Because there is typically, and I'll use an example. We may talk about it with Brad on as well, but earlier this week, one of the agents wrote a case, and it was stuck in limbo for a month, and because they were looking for the case was written at another carrier, and the medical exam was done at another carrier, and then it went over to Mutual of Omaha. The medical exam was not able to be transferred. So, getting Brad involved and saying, hey, this is what's going on with this case. And we weren't getting good communication back from the underwriters and stuff like that. Jumping and getting Brad on was a perfect example of being able to get an answer quicker than just waiting for someone to get back to us or what's going on. So that's good for us to know about, of how we can utilize those different aspects. And I think that's really important to understand as well. So let's make sure that we ask those questions as well about how we can leverage that for ourselves, the agents and agencies that we work with. So on that note, Brad's actually here. So like I said, this is, I'm going to have him jump in. This is not going to be way too formal or anything like that. I want this to be a conversation, and then we'll go from there.
Excellent.
Let's see. Brad Coffin, the man, the myth, the legend.
Hello. Wow, this is a little dark. Hang on, let me.
I was gonna say, it truly the man, the myth, the legend. Like, what's going on over there?
I know. I just haven't paid my electric bill this month.
Sorry to go solar, Brad, or
no, it's kind of an overcast day here, and I just have like an egress window here in my basement. Typically, it provides enough light, but I guess not right now. So
So guys,
I haven't-
this is how Mutual of Omaha treats their employees. So this is going to be a good indication of how they're going to treat agents we work with.
Well, it's bad. I've been one of those guys that's resisted going out and buying a camera and buying like one of those lights. So I'm using basically my laptop camera, which has been good. I've not had any issues with it, and just kind of wing it with the lights, and it's not been bad. And I feel like I'm doing these presentations several times a week, so no one's complained about it. But let me hit the light switch here real fast.
No worries, no worries. Well, as Brad's doing that, actually give me a second because I want to grab my notepad. So I'll be back in 30 seconds as well.
Get away from some of those overhead lights here. There we
No,
go.
you're good. That's fine. That's good. So, good morning.
Good morning. Where's home for you?
Chicago area. I live in the city. The office is in Barrington. It's a northwest suburb, if you're familiar with Chicago.
Yep, very familiar. I'm down in Indianapolis, so I cover Chicago as part of my typical run. So
Awesome.
Yeah, when has Mutual of Omaha released you guys yet?
yeah, I mean we're allowed to be out and about. It's kind of funny. Most of my customers' offices are still somewhat closed. They've kind of left it optional for their employees. So, I have some counterparts who have groups that have done big meetings, and so they've been out doing it. I am able to travel, but I'll be honest, the demand right now to see me face to face is a little low, and I'm a little hurt by it, but I'll get over it.
Don't take it personal, Brad. Don't take it personal.
It's tough not to, but it's okay.
Well, on that note, let me do some introductions. So there was a few other people that were supposed to be on, but they're not on. So we're gonna have a nice tight crowd today. But Brad, this is Jeffrey Drucker. So again, I don't know if you guys were talking, but he works with one of our affiliate marketing offices called Wella Financial, who's also out in this area. And Wella is a group that we brought on not too long ago. And they're a One America shop, actually, career shop, but non-captive. And Jeff, I mean, I won't. Should I age you too much, Jeff?
Well, just keep in mind I was a child prodigy.
I mean, Jeff's been in the industry for I don't got the number 45 years.
Yeah.
So he's been doing this for a little while. And
I hit 25 years this year, if you can believe that.
What was that?
Years. I hit 25 years in this industry.
25?
25 this year in this industry.
Wow.
Yeah.
So you started when you were like 5.
Your hair is still dark.
I know. Non-colored, non-chemically induced. It's natural. And I still have some. Like, I have 2 daughters, and I figured one of them would gray me and the other would bald me, but hasn't happened yet.
Well, I'm looking, as you guys know, I have 5, so I'm well on my way. So, but yeah, so like I said, Jeff has come on as a business development advisor, and we're really excited to be partnering and working together because, I mean, with his experience and knowledge in the industry, he has lots of relationships. So today, Thursdays are really that training. We have a weekly training for the BDA and AMOs that we work with. And so we have a handful right now, actually just under 10, but getting them all. This is kind of the first one that we've restarted in a little while. So you get to kick off the whole year for us, Brad.
Awesome. So Jeffrey, if you don't, do you go by Jeff or Jeffrey?
Either one.
Either one. Okay.
Yeah.
Have you been affiliated with One America for a while?
Yeah, a few years.
Offices? Okay. So were you one of the old AUL career offices before they kind of merged under One America? No. Okay.
No.
Okay. The reason I ask is, part of my 25-year stretch, I did about a year and a half, almost 2 years with State Life. Right when they purchased the One America asset based. So I was doing long-term care for State Life. So after State Life got out of the life business, they only had a long-term care policy. And so I was repping that, and we wanted, and so then they merged with or bought the Golden Rule product, and under the One America logo, and we wanted access to that product because we were an LTC firm. That's an LTC product, but at the time they were only going basically direct to advisors, direct to banks, whatever. They hated the BGA channel at that point in time, so we couldn't get access. They were like, "There's no comp, there's no spread available," and so we were kind of cut out. And at that point in time, some of us could see kind of the writing on the wall. So I ended up taking another job shortly thereafter. And literally the day that I'm leaving, I get a call from Dick Merrill, who was the head of that product line, coming over, and he called me up and was like, "Oh man, we have big plans for you." I'm like, "You guys have been on board 6 months and have never said one word to me. And now the day that I'm leaving, you're going to tell me that you had big plans for me." A little late. I'm nice knowing you, but you look at it now and they've got, all the different channels. They're doing well in the beach space. And, we tried to get them into it. Now it's back in, well, I think that was 05, 06, 07 timeframe. So going on 14 years ago, if you can believe that. So
yeah, it's amazing the background of the industry. Like I've always said, the players don't change, just the team they play for.
Yeah, that's right.
But,
so
with that said, so on the other side then, because we have there'll be a few people that'll be watching this afterwards, and we've got this recorded. So let me do a semi introduction from my standpoint on our relationship and who Brad Coffin is, which is, I mean, already just from your last name, and I know you always use this as your tagline. I don't know if it's going to get old at some point, but I mean, It is the perfect name for insurance. And you have some history as well. So I won't steal too much of that thunder, but we've been working with Brad from our end for the past couple years. I don't know if that just hurt both of our souls at all. But it's been an honor to work with Brad. Extremely knowledgeable. The spaces he's been working with Mutual of Omaha for what is it now? It's kind of been on and off.
Right. 4 years with, and then took a 6-year gap to go work for MetLife, and now I'm 4 years back. So I got about 8 years under my belt with a little 6-year gap in between.
Yeah. And then, like I said, he is from 3Mark standpoint, he's our internal, and he's been extremely useful. We've done events with them. He's come out to the Chicagoland area, probably drove back regretting it. And then he's been extremely helpful. So Brad is our guy. And then I know he's not here, but as the internal marketer, then Tim Whitemarsh.
Yep.
Did I get that correctly?
Yep, no E in there, so it's just Whitmarsh.
Whitmarsh. I knew I missed something. But then Tim Whitmarsh is our internal. So they kind of act as our team that, as the extension of Mutual Omaha, we have access to them on our side. And just so that everyone understands, because everyone that's listening to this, they're in that marketing and distribution space. And if Brad needs to correct me on this afterwards, please let me know. But use Brad as much as you can. He is there for us as a resource. He's got the inside scoop of what's going on with Mutual Omaha, and he'll define a little bit more of what that looks like, because I know Mutual Omaha has a broad spectrum of products. But Brad, you're really on the life side between simplified issue products and the standard life division. So don't call Brad crying about Medicare and things like that. That is not going to work. He's not going down like that.
Yeah. That's for sure. And we've kind of cut our teeth in the brokerage division over the years in the Medicare marketplace, and have really kind of grown our life business. We kind of joked, we had kind of a record month in the month of March. We did about 18 million just in our brokerage division in life business. And you'll see here in a second, we've got one of the deepest life portfolios out there, which is what helps make our offering so attractive. But what's funny is we did 18 million just in the month of March last month. We're going to come pretty close to that again here in April. And what's funny is that's more business than our brokerage life division did in the whole year of 2006. So, we've seen just tremendous growth, and part of it is we kind of continued the mutual story. Mutual has always talked about our diversification, where we're a big player in the Medicare marketplace. We're a big player in the life space because of our depth of portfolio. And that has really helped us from a rating standpoint, because we're not tied to one product line that will make or break us. You look at our financials from the last couple of years. We took some hits several years ago because of our Medicare claims were so high. Even though we were having record life sales, the street didn't like it because our Medicare claims are so high. Well, then you look at what happened last year with COVID, and a lot of seniors didn't go see their doctor. So we had record low claims, even though we have one of the biggest Medicare books in the business. Outside of the collection of the Blues, I think we're the top selling Medicare company out there. And yet, we had some of our lowest claims history just because people weren't going to see their doctor. So we continued to have some really strong growth years and months last year, even though we had an increase of our life claims of about 100 million, which is kind of surprising. The life business, being around for 100 plus years, from an actuarial standpoint, companies have come pretty good at predicting their claims and what's going to happen because of all the actuarial tables. And so when you see basically a projection of about 900 million of life claims, and we came close to hitting about 1 billion of life claims, mostly because of COVID, it's kind of interesting that 10% off really didn't hurt our financials at all. Even though you think 100 million, wow, that's a big number. But because of our broad diversity from a company standpoint, it really didn't have much of an impact on our financials. So with that being said on the company, let me talk a little bit more about our life, and I'm going to share my screen. I don't know if that will come into the recording as well.
It will.
Okay, good, excellent.
And as you're sharing that, like I said, the last thing I said, then is the field is all yours. Is two things for everyone here is, and I know Jeff, you're in essence the guinea pig, as well as myself, but Brad's gonna go through a presentation, but because of, like I said, this is different. This is not an agent presentation. This doesn't need to be polished. So as Brad's going through this, ask questions. And if you're seeing the recording then too, ask those questions for yourself, write them down. Let's make sure you get them addressed, because what I want everyone to walk away with by the time that we're done here is really 1 to 3 things, or 1 to 3 value propositions that you can take and boil down to in, a short sentence or a few sentences, so that you can use those tidbits when you're talking to agents and be able to pivot really quickly of saying, well, hey, you're working with this carrier. Do you have Mutual Omaha in your product portfolio? No. Well, then you bring up those 1 to 3 things in your arsenal and pull out that arrow at that time. So that's what I want everyone to grab hold of and take notes as you're listening to this information right now, but ask the questions. And Jeff, since you're live right here, if there's something that comes up, and same thing on my end, when Brad brings something up and we want to take a deeper dive into it, ask the question right there. The last other thing then that I was going to say too is something that I completely forgot since I went to the first one so long. So we're going to leave it at that. The last other thing is I know Brad basically said it as well, but the answer that everyone's trying to get to as well by the time that we're done is exactly what Brad's going to go through, is why should agents have Mutual of Omaha as part of their product portfolio? That is the question that everyone needs to be able to have answered for this session. And what we're doing with Mutual Omaha. We'll have other things that we do with Brad as well. And of course we have Brad, access to the team, but that's really what I want everyone to, as the takeaway, is to understand that concept and idea. So without any further ado, I'm off my pedestal. Brad, the field is yours.
Am I able to mute you? No, I'm just kidding. So,
I'll do it
kidding.
myself, okay?
I'm completely kidding, just joking. So we know each other and can play around a little bit with that.
Only if you know sign language.
Yeah. So let's dive in here real quick. And as I've mentioned, mutual, we've got the street, if you will, being, the rating agencies love us because of our diversity. And I think one of the great things that you also will have is name recognition and brand recognition. People understand or know the Mutual of Omaha name, whether it's from the old Wild Kingdom days with Marlon Perkins, Jim Fowler, later taken over by Peter Gross, or they see our golfers on TV every weekend. Some of the top players in the world are carrying, our patch on their shoulder or on their hat. So hopefully that is something that you don't have to spend time in talking to your clients about. When you're going through and presenting them with a sales idea, and then when it comes down to throwing the product in at the very end, and they ask, well, who's the carrier? And you say Mutual of Omaha, you typically don't have to spend a whole lot of time with the client then saying who we are, which hopefully will help close the sale a lot more quickly for you along those lines. And so the brand recognition and the depth of the portfolio, I think, is something that will hopefully carry you guys on. Now, I talk about the deepest portfolio in the life business, and we kind of internally break it down between fully underwritten, which is your traditional term business. We have two different IULs, accumulation or protection IUL. We have a current assumption product, really only gets used for some conversions, if you will, but not really playing in that space. We got out of the GUL marketplace about 2 years ago now, about a year and a half ago. So that was not a space that we want to. We could have kept tweaking our rates to keep a product out there, but we really feel like our protection IUL provides the client what they need from a protection standpoint. So why keep tweaking a product so it's not competitive to try and get them to sell our protection product? Why not just pull it? And so that's what we did. But then what really has helped us and been one of our best growth stories is our simplified issue portfolio. And a lot of times when people think simplified issue, maybe they think about children's whole life policies, maybe they think about final expense, but that's not where our portfolio ends. We also have a lot of products that fit kind of the middle age range clientele. So not just the people under 18 and not just the people over age 65. We've got a deep product portfolio that we'll touch base on here that hits that mid-range from an age perspective, the 18 to 70-year-old. And we can do it with different sources and from a different underwriting standpoint, which I think is really what sets us apart in that marketplace. So if you're looking for reasons and ways to go about recruiting agents or talking to agents, I think if you're in the fully underwritten space, we've got some of the best products that we'll touch on here and just kind of highlight a reason why you want to have us in the portfolio. But then if you're looking for a new way to recruit some non-traditional guys, your PNC agents or some other bank guys, that your mortgage guy, those types of guys, we've got a great portfolio of product that really fits that marketplace that maybe you didn't know that you had access to by having access to us. So that's just a quick highlight of the portfolio.
So just out of curiosity, and you're already going to regret not being able to mute me. Split in the portfolio for Mutual of Omaha. I mean, where does Mutual of Omaha lean towards within fully underwritten and simplified issue product line? Like, where are you guys doing most of your business?
So I think last year we were in the neighborhood of 100 million simplified issue and about 60 million fully underwritten. That's just brokerage.
Gotcha.
So ballpark there. We're having a really strong year on our fully underwritten IUL business. So it's the simplified issue is growing as well, but so is the IUL. So we hope to see that number come down a little bit from a percentage standpoint. We'd like to see the fully underwritten grow some, and AG 49 and some other things in the marketplace have kind of helped us. And you'll see here in a second, the one thing about our IUL product line, we've been in the market 5-6 years on our IUL product line. And one of the best things that I could say about our IUL products is we really haven't changed our products. So while you've seen people kind of add things, whether it's the bonuses, the multipliers, and then all of a sudden you had AG 49A hit, and now they've got to change their products to illustrate better. We haven't played any of those games from a product standpoint. Our product line has stayed very tried and true to how we initially rolled it out, with a few minor tweaks, more just kind of adding some benefits and features and riders to it. But for the most part, the market has kind of come back to where we're at today, which I think is a very telling story with how our products were built to kind of stand the test of time, that we haven't had to go about playing some of the illustration games to get our products to be competitive. So we'll touch on that here. And when I say a simple, low-cost IUL story, really IUL has been our main focus for the last couple of years from a fully underwritten standpoint. And when I say simple, I like to call our IULs kind of IULs on training wheels. They are the most simple and basic IUL in the marketplace today, to the tune that you basically have a protection and an income or accumulation focused IUL built on the same chassis. And that chassis is one that basically we use the S&P 500. So we don't have 20 different options for you to select from. Some people see that as a negative. We see that as a positive, because what it's done for us has created what I would call the lowest cost story. And when I say cost, I'm not talking about premiums. I'm talking about the internal charges on these products. And especially in the day when the bonuses and multipliers were so big out there, when you started kind of testing or stress testing those types of policies, you could really see what the internal charges did to the performance on those contracts. Well, because we've got such a simple chassis, we haven't had to do any of those other games. We have no bonuses. We have no multipliers. We actually publish our full crediting history. We've got a microsite, a website that you can go to. It's discoveriul.com. And with 2 simple clicks on that discoveriul.com, you can get our full crediting history on our product. So for every gap or band that's out there, you could see what we've done. We have 3 crediting strategies: 100% participation, then a high participation, and a low participation, or basically an uncapped strategy. The majority of our monies are going into the 100% bucket. And on the historical sheets that we have, we are kind of keeping track on what the actual performance has been over time with each of those 3 strategies. And 100% has been the best performing between the 3. Now, if you like managing money and you want to play around a little bit with the different strategies, there are certain times when the uncapped strategy may be better than the 100% participation, because your cap is currently at 10%. And that's okay. You can do that. But over time, the 100% participation has had the best performance out there. And the beauty is, once again, that's pretty much it. You don't have a ton of moving parts that you got to go through with your clients to set the product up.
And you can use both strategies.
Yes, you can.
Yeah,
you
at
can
the same
split
time.
money. Yep. You can split money in between any of those different participation setups. But like I said, the majority of our money has been going into the 100%. So now
is there a floor, Brad?
Yeah, the floor is basically 0. I mean,
Okay.
there is a fixed option, which is at 2%. So you can get in around that 2% number, but for our product and for the markets, I don't know. It's the segments, because we do a 10th of the month draw. It's kind of been interesting. The segments haven't been, the timing hasn't played too bad in the client's detriment. But Yeah, so you could use the fixed option to keep that 2%. But really, the key for us is the charges. And when I say we have the lowest in the industry, I mean we absolutely have the lowest internal cost charges in the industry. These are cumulative charges. It's kind of crazy when you're looking at this, and client, for this particular example, the client paid in 300,000, and you've got some carriers that obviously their charges are at or above where where their total premiums were paid in over a 20-year stretch. We're under 100,000. And what that means to your client is more of their money is going into the accumulation bucket. But also what that means is when you stress test it. So think about the whole sequencing of return sales idea. The whole thought of sequencing of returns is you've got a client going into retirement. They have all their money in a managed account. The markets are going to be doing this. And for the client that puts all their, has their money in that managed account, if they take a couple of negative years early in retirement, the impact on their retirement account is huge. And so what you're trying to do with the sequencing of return is put them in a life policy on top of their retirement. So you leave their retirement bucket alone, you pull money out of life insurance policy following a down market year. So they're not losing money because of the market hit and taking an income out of the retirement account. You give the retirement account a chance to recover, if you will, by, the markets typically have a significant rebound the following a down market year. But by pulling out of the life insurance policy, you give it a chance to recover. But the problem that most people are having is they're putting their clients in these life insurance contracts that is opening the client up to more risk because the costs are so high within these contracts. So if you think about it, because the markets took a hit, is the IUL going to take a hit? Yeah, it is. So what happens with the insurance company is we're still going to take our costs and expenses out. The client's not going to get credited that market upside because there was no market upside. So for us, having the lowest fees and expenses in the industry, you're opening them up to less risk, if you will, by using our product for that sequencing of return story. And it's amazing to me how many people use the sequencing of return story, and then they're using some of these IULs with all these, charge funded acceleration bonuses and accumulators. And you're sitting there saying, all right, well, in that down market year, pull out of your life contract. Well, the life contract is going to go significantly negative because the fees and expenses are so high. And you're telling your client to take an income draw out of their IUL policy. Chances are it's not going to go anywhere. Let me illustrate it a little different way. So here's 3 different companies, us being one of them. And these are all companies. A and B are multiplier focused companies. And so this is just an income solve. So this is the income that at current max illustrated rate between us and the other companies, we're a little bit behind on the income. We're at 41,000, they're at 47 and 48,000. But what is amazing is as you drop the crediting rate on each of these contracts, ours and the other 2, what happens to that income? So if you dropped it to 6%, which is typically maybe anywhere from a 20 to 50 basis point drop, basically in the max illustrated rate, all of these companies took a hit. But if you look at ours only took about a $4,000 hit with that, while the other companies took, 15,000 plus just by taking the credited interest rate to 6%, drop it to 5%, drop it to 4%. And look at that. Neither of the other 2 companies are able to illustrate any kind of income. This is the impact that high fees and expenses on these IUL contracts can have. So if you want to have mutual in your portfolio, you're doing it, 1, because we have a very simple product chassis, but 2, because you want to mitigate some of that kind of risk that your client may be open to by putting them in a product that has low fees and expenses. So, that's kind of our IUL story, especially from the accumulation standpoint. The same thing really carries over to our protection IUL. And you think about protection IULs, they're all about kind of the guarantee that you have out there. And I'll be honest, we have one of the shorter guarantees. Our guarantee only goes to age 85. I'm completely upfront about that. I know it's one of the shorter ones in the industry. We're actually waiting on a reinsurer to come back to us with their pricing. We're trying to get that up to 90. So in the near future, we hope to have that up to 90 without making any kind of changes to our current pricing. But even with the 85, here's what I'll tell you. If you're running them to age 90 with any other carrier, I will take our 85 guarantee versus anybody else's 90 all day long. And the reason I say that is, if you think about it, from a protection IUL standpoint, what you're doing typically on a protection IUL is you are minimally funding these contracts to get it out to that guarantee period. And so what happens is the volatility in the markets will have a significant impact on how long that contract lasts after the guarantee is up. So for somebody else's age 90 guarantee, if you stress them down to 5%, 4%, whatever it may be, the majority of our competitors will stop at their guarantee period. So if you've got a guarantee to 90 and you're running them at 4, 4.5, 5, that product will not run out past 90. Ours does. And it's because of the low cost structure, the low fees and expenses. So even when you run ours at 4%, a lot of times we're running into the early 90s. So we're running out 7 or 8 years past our guarantee period and running out well past a lot of our competition. So I'll take my age 85 with one of the best prices out there in the marketplace against anybody else's 90, especially when you stress test it a little bit, which is what's going to happen. We all know that market volatility is like this. You're not getting a straight line 5 or 6% every year. Your market volatility is going every other year. It's bouncing around. So you need to stress these protection products because you are so thinly funding them. And you want to know, is the policy still going to be there when the client passes? And for a lot of our competition, unfortunately, if you're so thinly funding them, they may not be there. So that's our story there. But we also have a couple of riders that really set ourselves apart on our fully underwritten portfolio. And I'm going to kind of browse over these because I want to make sure I leave a little time to go through our simplified issue portfolio. But basically, we've got 2 of the most unique riders in the industry. One is this guaranteed refund option. This option may sound familiar because you see it on a lot of GUL contracts out there. It's kind of that other exit strategy for GUL that says, you know, if your client wants to walk away from the contract at some point in time in the future, you know, a GUL typically doesn't have an exit strategy. It's death because there's no cash value in there. So carriers started adding these refund option riders. We took it a step further. We had this rider on our GUL. We added it onto our IULs. So it's, I believe, the only product out there in the market that has a rider like this on their IUL, which you're opening up your client to a little bit of risk when you put them in an IUL contract. So what this does is create a truly guaranteed product that says, you know, if the markets have imploded and everything else has changed and your client wants to walk away in years 20 through 25, they can get 100% of their premiums back. So that's built into the contract. So it's a great backstop, if you will.
That's on the IUL and on the GIUL. It's on both.
Yeah, the protection IUL and the accumulation IUL. Both of them have that rider built in. So it's just an added fail safe. So if you have that client that is very risk averse and you're not sure they're going to kind of latch onto the IUL idea, being able to show them that, hey, if you want to walk away at some point in time in the future and get 100% of your premiums back, you have that in this contract. So great little add-on. The other piece I'll mention, the other rider that we have is this accelerated death benefit for chronic illness. So we have a true long-term care rider available. We do underwrite that. That's up to table 4 risks. It's a reimbursement model, long-term care rider. But what then we have that no one else in the marketplace has is this chronic illness rider that we don't underwrite. So how many times have you gone out there and sold a long-term care rider or policy and got declined, but you were approved for the life, but got the rider declined, and you had trouble placing it because you kind of pitched it as the idea of creating some type of a long-term care bucket for the client to pull off of. Well, with us, because we don't underwrite this chronic illness rider, if they get declined for the LTC rider, but get approved for the life, they get the chronic illness rider added back on. So you could have a client that's age 80, table 4, they get the chronic illness rider. And basically what our chronic illness rider is, it's no cost up front, so they're not paying any premium for it. They can do a once a year acceleration up to the HIPAA max, which is about 130,000 or 140,000 this year, ballparkish. So they could take an acceleration up to that 140,000, up to 80% of their death benefit, capped at $1 million. So depending on what size of death benefit they had, but that once a year acceleration they can use for those long-term care expenses, and that is an indemnity feature on this. So our LTC riders reimbursement, this is an indemnity feature. So it's just one of those nice to haves. There is an actuarial discount because you're not paying the premium for it along, but there is an actuarial calculation that happens if they choose to exercise it. So it's no cost to them if they go through the life of the contract and pass away. The client has never paid a penny for this long-term care benefit that's included in the contract.
So same thing with most cases with the accelerated benefit riders. If they accelerate 100,000, then it's going to go through the actuary. They're going to look at that and maybe they get 60,000, 70,000, but 100,000 dollars of the death benefit goes away.
Yep.
Yep.
So what it is, it's basically just the Moody's bond index times the life expectancy. So depending on the condition that has caused them to go on claim. And so obviously that premium number each year that they come to us for some type of acceleration will go down because their life expectancy will shorten each year. So
gotcha. That makes sense.
Yep. And so, keep in mind, we have this true long-term care rider. It's available in 49 states. But we are one of, the last surviving long-term care companies. I don't do the LTC side for us, but we still have traditional long-term care. We've got a life insurance with an LTC rider, and then we have life insurance with a chronic illness rider. So one of the deepest long-term care portfolios out in the marketplace. We are and have been working on pricing out maybe an asset-based product for some time in the future. But if that's the case, I mean, you think about it, that's a pretty deep portfolio. Asset-based, traditional, LTC rider, chronic illness rider. So great depth to our long-term care portfolio.
Just real quick on the LTC side, which contract gets that? Is it the life side, or is it the simplified issue side, or is it the separate?
Whole separate. We have a whole health division, so we have a health side that does the long-term care and DI, and we have a critical illness policy as well that all kind of falls under our health umbrella, if you will. Then we have a whole Medicare division that's a complete separate.
Okay, so that's what I thought. So there's 4 divisions for Mutual Omaha. You have the traditional life, you have the simplified issue contract, then you have the health contract, which is LTC, DI, things like ancillary products.
Yep.
And then you have Medicare.
A whole Medicare division. Yep.
Okay, so 4.
Yep.
4 divisions.
4
Huge. Contracts.
That's diversity in its best.
Yeah, that's important for so for everyone. The reason I'm hammering that down, and we talked about it a little bit before Brad got on, but making sure we understand when someone's going to get contract with Mutual Omaha, which division they need to go after, because we can say, well, here's a Mutual Omaha contract. They go into Sure LC, they click Mutual Omaha or United of Omaha, and our contracting is going to take care of that. But maybe they send the contracting over to Simplified Issue and they get a writing number, but they need to write a fully underwritten IUL. Well, that contract won't do that for them. So just important to mention on that side, ask more questions when bringing up Mutual Omaha when someone's getting contracted with them, because that will cause confusion on the back end, and we don't want that to happen.
Any other questions, Jeffrey? Do you have any questions? Pretty good.
Not to this point.
Keep in mind, fully underwritten portfolio. Really, our IULs are kind of our flagship. Very simple, low cost structure, low fee structure. with some of the best riders in the marketplace, being a grow rider and chronic illness rider, low fees and expenses. So that's kind of our story. If you're looking for something different, I think that story is very different than most of our competitors that are out there trying to sell their IUL contracts.
Yeah, I guess on the rider, the LTC rider,
Sure.
is there a choice of percentage that can be?
Yeah. So our true long-term care rider has a 1, 2, or 4% monthly benefit that you can choose. But then also you can choose a percentage of death benefit that's available for long-term care. So if you had a client that did a $1 million policy and they only wanted a pool of 500,000 long-term care pool, they could do a 50% benefit. I will give you one little tip though, one fun little sales idea. I would never sell a 50% LTC rider. I would sell 2 $500,000 policies, and here's why. So if you think about it, your client has $1 million death benefit need. They want to apply for $1 million, but they only want 500,000 of long-term care. So let's say you do that, you do a 50% rider, which is fully possible on our contract. If they exhaust that $500,000 of long-term care, that leaves them with $500,000 of death benefit, which is great. But what if they're still living and still need long-term care? They have no other avenue to have any fees or any type of money back from us for those long-term care expenses. They just, they've exhausted the LTC. They just have a $500,000 of death benefit. Now, if you've done 2 $500,000 policies, what did I say we have free, no cost? You have a chronic illness rider. So on one policy, you're going to do a 500,000 long-term care at 100%. So that gets them their $500,000 of death benefit and $500,000 of long-term care. The other policy, because our chronic illness rider is no charge up front, they're doing the $500,000 of life coverage. But then if they've exhausted that other pool and they still need care, they have access to 80% of that $500,000 because that's our cap on that. So they have another 400,000 that they can access for long-term care expenses. So, and for me, that's kind of what the chronic illness rider is best for, is a backstop. Hopefully they've done some other long-term care planning. And once they've exhausted all of that, the chronic illness rider is a great backstop.
Yeah, you're giving them best of both worlds.
Exactly.
Yeah.
And so you can't have both on the same policy. We can't do a chronic and a long-term care, but if you split the policy, they can get both.
And Brad, what does the LTC cover in the way of the different types of LTC, like assisted living, home health care? Is it just facility, or will it cover the other?
It covers all of it. So 2 out of 6 ADLs is kind of the trigger,
Right.
typical trigger. And this is a true 7702 rider. So, all of our definitions are nationally approved long-term care definitions. So the 2 out of 6 with the 90-day certification, but then it's going to cover, it's a reimbursement policy for pretty much your traditional expenses, nursing home, home health care, adult daycare. We can even do some home modification type expenses, which we can pull a couple months out of the fees to do that type of stuff. So it covers the full gambit, what you would want it to cover from a long-term care expense.
Okay.
So outside of that, before you go into simplified issue, can you talk a little bit about accelerated underwriting?
Sure. So the beauty of what we have to offer, we've got a drop ticket application process for our term products and our IULs. And what that does is that opens up the client that is ages 18 to 60, up to $2 million. They can get access to our accelerated underwriting program. Now, not everybody's going to qualify for that. So I think the way you need to prep it with the client is, hey, let's just do this drop ticket. You're going to get called by an examiner. They're going to do a phone interview. The company's going to try and underwrite you off of that. They may want to still do labs. Your anticipation is they're still going to want to do an exam, do labs. But there's a possibility that the company may say, you know what, we got enough information. We're going to run it through and make an offer just off of the phone interview, and then we pull the national databases. So for us, the accelerated underwriting is available for our IUL products, which is great because you could do, you know, a 50-year-old doing a $2 million protection IUL and have it run through in about a 3 to 4 day time frame, which is just amazing. I've had a couple of those happen. So accelerated underwriting for us, ages 18 to 60, you have to do a drop ticket. So that's an online drop ticket. It's kind of the trigger that starts that. When we see the drop ticket come in, that's what exam one then does the phone interview. We get all the information from exam one, the completed part one, and then the completed phone interview. We try to underwrite it off of that. Then we may order records, we may ask for the exam, or we may make an offer just off of that.
That makes sense. And that's all the fully underwritten product lines, so term as well?
Yes, term and our IUL products. And Nathan, that's a great lead-in question to the simplified issue portfolio, because there's a significant difference between accelerated underwriting and what we're going to talk about here with simplified issue. With accelerated underwriting, we always have the reflex to full underwriting. So our reflex, if we don't get the information we want and need, we're going to go after medical records, we're going to go after the labs, we're going to do all that stuff. That's accelerated underwriting. This simplified issue portfolio is a true accept reject model. We don't want to go after any medicals. We don't want to go after blood, urine, anything like that. So there is no reflex on this product portfolio that we're going to talk about. It is truly accept reject off of that. So so there is a significant difference between accelerated underwriting and simplified underwriting. So that's a great lead in, Nathan. Yes, Jeff.
All right, two quick. Does the LTC writer, can that be included in accelerated?
Not right now. We have a separate LTC writer application, which asks a couple of different health questions. We haven't found the right way to get that included in the drop ticket process yet. So anytime there's an LTC rider, you can still do a drop ticket, but no, it's going to be fully underwritten. We're not going to be able to take it through accelerated underwriting. We do have an e-app available for the policies that does include a long-term care rider. So you can do the full e-app that route. Just know if you're doing the LTC rider, it is going to be normal underwriting. There is no accelerated. I know one of our competitors allows them to do the long-term care rider with it. We're not quite there yet.
Okay, and one last, if it's a term through accelerated, or if it's a term regardless, and they convert to a UL,
yep.
Does if the LTC writer, if they want to apply for that, I would imagine that goes through underwriting.
That would. Now they can, when they convert, the chronic illness rider is included in the conversion. But if they did want the long-term care rider, we would ask for the long-term care rider supplement, basically, and then we'll take them through that kind of that LTC underwriting if they wanted to add it.
Can that be rated separately?
Yeah, and it actually is. So what happens is your client that applies for us will get two different risk classes. They'll get a life risk class, and then they'll get a long-term care risk class. We have 4 risk classes for our long-term care rider: preferred, standard, substandard 1, substandard 2. So those are the 4 risk classes for the LTC rider.
Okay, thank you.
Yep.
That's the thing. Accelerated underwriting, they can get all classes, right?
Yeah, standard or better is what they're looking for the accelerated underwriting. So standard or better. So 4 risk class: preferred plus, preferred, standard plus, standard.
And just because I know with some of the other carriers, there's not a lot of them, but that accelerated underwriting concept for some of them, depending on their parameters, if it kicks out where it doesn't go through accelerated underwriting, and this is why I like Mochi Omaha within this context, because they will go get that reflex and go to the ask for the medicals.
Mm-hmm.
Whereas some carriers, if you didn't go with the accelerated underwriting, then you have to bump up the death benefit to get to do a medical then. So just FYI on that side, it's good to know just comparison of what's going on out there as well.
Yep. Very good. So we'll jump into our simplified issue portfolio here, because I think it's going to add some depth to your portfolio and may provide some other recruiting opportunities for you as you're looking for different options to be able to present to clients. So I'm not going to go real in depth on the products themselves, but what I want you to realize is that the underwriting and how we underwrite with this product line is truly different than what you're used to from a fully underwritten standpoint. So we do no blood, no urine, no paramed. It's quick to issue, which means the agent's getting paid faster, which is the beauty of it all. We have our
Oh. Hopefully that's not on my end.
well,
Let me see real quick. Jeff, can you still hear Brad?
Express, our living, we have simplified issue underwriting. So we have the point of sale decision application, which basically means if you're in front of your client or even over the phone, you can do an online application that once you get done with the health questions and you click submit, like I think the last set of numbers I saw, about 85% of the time, you're getting an instant decision. You're getting an accept reject right there at time of sale. So you're talking 20 or 30 minutes for the whole application process. But then the other thing that we have is if you've got a smartphone, you can run a quote for any of these products that we've talked about on the smartphone. So we've made the quoting simple in the application process and the underwriting process very simple. We have paper options. So if you want to go that route, no problem. We have that option, but we would prefer you go the point of sale, the e-app process on this. So let's talk a little bit about each of these. Like I said, most people when they think about simplified issue, they maybe think about, final expense. Keep in mind, our final expense is underwritten. This isn't a guaranteed issue final expense. That's going to mean two things for you. One, better rates for your client because it's not guaranteed issue. And two, typically better compensation too, because it's not guaranteed issue. So we have a couple of sets of questions to get the level death benefit. They have to answer no to all the questions. In the part 2 of the application, if they answer yes, it's going to go to a graded. If they answer yes on that part 1, then it's going to be a decline, basically don't submit type scenario. We're going to pull the MIB, the pharmaceutical, and then occasionally we'll do a phone interview. They're very infrequent. We do everything at all costs to avoid doing any phone interviews. We've run into some situations where like a driver's license number doesn't match up, something doesn't match up that we got to get some clarification on it. Other than that, it's pretty simple when it comes to the underwriting process. If you do have access to guaranteed issue final expense product, I think you should go down this path and get our accept reject in that 20 minutes. And if they're declined, then take it over to your guaranteed issue product because the rates are going to be significantly better on this product than any of the guaranteed issue products in the marketplace. This is one of our top sellers. We get several thousand apps a week on this product. It's kind of ridiculous how much we do. I think in the 60 million range last year on the final expense. Children's Whole Life, great product. One of the key things here is that in that middle box, grandparents can sign. We don't require the parent to sign. So a lot of times if you're out there selling annuities or other products to the more senior individuals and they want to buy something for their grandkids, this is a great product to be able to do it. There's guaranteed, it includes a guaranteed insurability. So it gives them 5 different windows, like when they have a kid, when they get married, and then certain age bands that the consumer or the client can buy up some additional coverage. So it is a nice little whole life contract available out there.
I'll just say on this side, this Children's Whole Life is gold. Like in the market space and all the groups that I talk about, when everyone sings that, well, what should I do with the child? And even if someone's saying we'll put an IUL on them or something like that, even before that, they're saying do this because it's inexpensive. It gives them guaranteed coverage. It's going to cover their funeral. I've seen this a lot with the Children's Whole Life, and not that we're going to go after it, but it beats one of the other top ones that are out there. Like something that starts with a G and ends with an Erber.
And there's 2 health questions. So it's pretty simple. And the fact that the grandparents can sign, I think really helps set itself apart.
So with 2 health questions, you're giving them a GIO, which
Yeah.
most likely has 7 options. So you're potentially giving them $300,000 of coverage with just a signature.
Yep. Pretty darn good, huh?
Pretty darn attractive.
I mean, and the pricing is amazing.
Yeah, it's a great little product. So if you are in that senior marketplace, or that 55 and up marketplace, and aren't asking about their grandkids, I think you're missing a good opportunity there.
Yeah. Can I take it one step further?
Please.
You have a SPIA.
We do have a SPIA.
So if a grandparent wanted to put in a SPIA to fund it, let's say until the child is 21, you can do that.
Yeah, I think our biggest issue is we don't have any internal stuff set up. So,
Okay.
we could do the SPIA, to have the check deposited, and then set up the draft date to kind of wash itself out.
That was my next question. If there was an internal mechanism where it can just be, okay.
Yeah, so that would be the one thing that they would probably have to do, is just set that up. But we have a lot of flexibility in setting up the billing dates on these products. So.
And last I was saying is just that on our end, especially when we're talking about it, we look at the grid. Children's whole life commissions are phenomenal.
That's a good thing. I won't spend a lot of time on the Term Life Express. The only thing I'll mention here is with the age banding, and the age banding is going to look the exact same for the face amounts as our IUL Express. And our IUL Express is our hottest product out in the marketplace today. We're getting about 700 to 750 apps a week on this IUL Express product. And if you look at the age range, 18 to 70, 18 to 65, really, if you think about it, there's a lot of overlap with the final expense. Our final expense goes down to age 45. But I'll tell you, if you have healthier younger clients doing a final expense, those clients in that 60 to 70 range, this product at the 25K level, I ran one last week for a 65-year-old, 25K for a 65-year-old IUL Express was cheaper than a 15K final expense product. So if they're healthier and can get underwritten for the IUL Express, it's cheaper to do the IUL Express. So for some of your younger final expense clients that are healthier, the IUL Express may be a better product for them, better performance and cheaper, and get more death benefit out of it. So this IUL Express product is it's amazing. It's kind of a Swiss Army knife of products right now. We had a guy do a little sampling of policies that got issued over like a 1 week time frame, and we had premiums as low as like $10 a month up to somebody that's doing a couple $100 a month. So you can minimally fund it, you can max fund it. There's so many different options that you can do with this product, and it's all simplified issue. So when you think about it, what we're doing here is the MVR, and then, like we said, phone interview as needed, but the MVR, final pharmaceutical check, MIB, and then the health questions on the application. And that's it. And the beauty that we've done with this is we've set it up on this auto decision platform that will take your client through a couple of things. And by the time they're done, they're getting their underwriting offer right then and there, which is really accept reject. So standard tobacco, standard non-tobacco are our 2 risk classes for this product. So even if you're in the IUL space and you're doing a lot of sales under 300,000 on fully underwritten IULs, I would take a look at this product for a couple reasons. One, think about the amount of time that you're spending on underwriting. You have a $200,000 IUL and you're chasing down APSs and that type of stuff. And the performance on this contract, it's not too bad. It's pretty competitive on the performance side. If you're looking for a true protection type sale, this has a 20-year guarantee, so it's not the longest of guarantees out there. But even when you run it minimally, it's still going to run out pretty long. And from a quoting perspective, the other thing that we have on this is some really good no-cost riders. So we have the terminal and chronic illness riders that we talked about before, but we also have and we added a critical illness rider. So if they have a cancer or a heart attack, stroke type scenario, we will pay out a benefit based on that. So that's all built in to this contract. So it's a great little product. But the neat thing is running a quote, because what we've done is we've set up the mobile quotes tool. So we have 2 solves that you can do on your phone. Now, WinFlex is going to be your kind of the gold standard for running illustrations. But if you want to do this and do it quickly, you can do the mobile quote. And so what the Easy Solve does, so there's 2 different things you can do. The Easy Solve is basically going to run it out minimally to 120. So the minimum premium needed to carry the policy out to 120 at the current max illustrated rate. So you'll get the 20-year guarantee plus more. But then there's also a minimum premium solve, which is going to do that minimum premium to guarantee it out to 20 years, or for that 20-year, which typically even run at 3.5, 4.5. It still runs out well past that 20 years. So kind of built on the same chassis as our other products. So really kind of cool quoting tool to be able to do it. But really the meat of this product line is the application process, the auto decision. And I'll come back to this here in a second. The auto decision platform that we set up it's truly amazing. So what happens is you are with the client face-to-face or over the phone. You fill out the client's personal information, so kind of part 1 of the application. Then the client has to sign the HIPAA. And so what happens with the HIPAA is that allows us to start pulling the national databases. And so if you're over the phone with the client's going to get sent an email. The client has to do the signature over the email. And then once they click submit on that, then the agent will be able to continue with the application. So it can get a little clunky if you're doing it over the phone. It's much easier if you're face-to-face, because they can do DocuSign or kind of sign on an iPad, that type of thing. So much easier face-to-face with this, but it will work over the phone. But then what happens is the agent will ask the underwriting questions. So there's a handful, maybe call it 10 health questions. While the agent is asking those 10 health questions, because we have the HIPAA, we can now pull the national databases, the MIB, the pharmaceutical, the MVR. So by time you're done asking those health questions, we've pulled those national databases. We take all the data through this little underwriting algorithm that we have, and then you hit submit. And what it's going to do is it's going to spit out your decision, accept, reject, 85% of the time. So 15% of the time, we're going back and an underwriter needs to take a look at it. And we're not going after any additional information. It's typically they said no to some question, but then a drug popped up on the pharmaceutical check that something's not jiving. So we just need the underwriter to take a look at it. So, and we're constantly, like right now, when we rolled this tool out about 1.5 years ago, we were about 70%, and we've gotten it up to 85% by looking at all the referrals to underwriting and try to tweak whatever our rules were. So we've got most of the low-hanging fruit, if you will, off of that. So any tweaks we make to that underwriting, it may get another percentage point or two. Our goal would be close to 100%. But the neat thing is we've had about 70 to 75% adoption rate on this e-application tool. So where I said we're getting in the neighborhood of 6,000 simplified issue apps a week, about 80% of those are coming in using this auto decision platform. So it's really helped us from a timing perspective and from a staffing perspective of having to have every single app touched by an underwriter when we're able to get things in and out the door that quickly. So really,
that's awesome. Well, I know you got some more, but I want to be cognizant of time as well. Just gonna jump to things. Oh, perfect. That was the last slide.
Yep. The only thing I wanted to show, I'll leave this up on the screen here, is if you're looking for anything from a marketing resource perspective, yes, around our simplified issue portfolio, use this website. There's no sign in needed, ton of training tools, videos, all that type of stuff on the products and on the process. So mutualofomaha.com/simple. That's your website for anything simplified issue.
So just to go through that real quick with resources, we have discoveriul.com.
Yep.
That you guys have. Then mutualofomaha.com/simple, which has a bunch of resources. And then
I'll give you one more. So mutualofomaha.com/LTC-rider. So a whole microsite geared towards our LTC rider. It has a cost of care analysis, kind of a little calculator where you can plug in a state and then how long until they go on claim. So then based on 3, 4, 5%, whatever inflation you want to put in there, it'll tell you what the cost of care for that state's going to be. Kind of a cool little tool out there. So,
just double check, that was mutualofomaha.com/LTC
-rider.
-rider. There we go. Yeah, because we'll put all those together on our end, so you guys have those links in one place. Because those are good, like anything that we can get our hands on that doesn't require a writing number right away and they can get access to, agents eat up, because most agents don't know that stuff's even available.
Yep.
It's not like other people are talking about it. So mutualofomaha.com /simple, Discover IUL, mutualofomaha.com /LTC-rider. And then the mobile quote, just to mention, because you talked about it, that's doesn't need to sign on either. That you can download right away. I just did it and ran a quote.
Yep.
So it took
Very
me just
simple.
seconds.
Very easy. So, and none of those websites require a login. I think if you know your login, you could sign in there and get access to a few other materials, but pretty much anything you're going to need to sell with Mutual, training wise or product information, is going to be on one of those 3 microsites.
Perfect. Well, I'll give one more question just to see, Jeff, if there's any other last things, but then we'll wrap up and get out of here.
Real quick, the children's plan waiver, you have a grandparent or a parent paying the premium. Is there a waiver that would apply to the insured?
That's a good question. I'll have to look at our materials and send that over to you. You mean if something happens, like if the grandparent and then something happens and they pass away?
More so the child.
More so the child. I believe there is some type of waiver in there, but I don't know what the triggering effects on the waiver are. So I'll send that over to you.
Thank you.
Sounds good. Well, and then just so that everyone knows on here as well, when this is recording, Brad, you made the short list. So we have an important contacts sheet, and you're on it. So for everyone that's in the band, that's also going to be in the Google Drive. So Brad's information is on there, his email, his phone number, his address. So you guys can visit him at his house.
Hopefully you have my old address, so that's perfect.
That's what you think, Brad. No, but we're excited. Like I said, Brad's a great resource. I appreciate your time, Brad. We'll be definitely following with you afterwards, and then I'll send you over the few other people that would be on. I'll give you their contact information as well, so that if they come knocking, you at least know who they are.
Sounds great.
Appreciate it, Brad. You have a great rest of the day. Jeff, we'll talk later.
Very good. Brad,
Thanks,
nice
Jeff.
meeting you.
Nice meeting you. Take care.
All right.
Have a
Bye-bye.
good day, everyone. Bye-bye.